mind it testing it once, but it has to hold the balanced price range, right? So if you're inside the signal service, pay yourself a 10, hold runners. Oh, sorry guys. Simifixer! It works. Good stuff. Cheers, Simifix. Appreciate that, bro. Yeah, it's delayed SMT up on the high, isn't it? For red pillars. I think it... yeah, it's okay. Wasted damage, body tells a story. Sorry. So you should have paid yourself, right? You should have already paid yourself. So if you're now looking to drive out these relative equal lows, it's now just allows to slaughter. Your stops above that high on your runners. Your runners not move. So it's a high. It's a high risk trade. Oh, Gardner's in. The Gardner's in. All right. So in at 95, paid out at 87. Just holding runners now. It's getting a little morning. It's a little morning trade in the under the belt. At the moment, I don't want to see price through this low. I don't mind if it comes and takes out these relative equal lows, but for bullish continuation, I don't want to see it through this unmitigated range. Right, so we came back yesterday, and we went back into our volume balance on the daily. If you were trading with us yesterday, we took the very high down to the very low. It's a 300-point move. Then I bounced this long back up into here. I missed this trade, called it, but missed it. But this was coming back down into the daily volume imbalance, right? Inside of a premium. So if price is super bullish, guess what? It's going to go outside of a higher time frame premium. But for me, we've got volatility coming into the market with retail sales and unemployment claims at 830. Right, we haven't taken the Asia high or the Asia low. So at the moment we're just consolidating. For me, I'd like to see it sweep these relative equal lows before it was to move higher. Okay, so this is why I'm referencing this balanced price range inside of a premium for it to do that. If you're for red pillars, if you're wondering about this high, consider your delayed SMT. So I'm just gonna take one more off here. So now I've just got one runner, right? So taking out those relative equal lows on this little 1 minute. Just now looking to, which is back down inside. Jesus! Frank! Fucking blower! Jesus! So I'm just holding one runner now to come and take out these relative equal lows, okay? So I've paid myself inside of, you guys will know, red pillars. Pay myself in a 5 discount now, just holding a runner to take out these relative equal lows. I swear to God, I'm going to kill him. 1 second. I mean, there ain't a leaf in sight. There ain't a leaf in sight. Oh, God damn, is it annoying. SMT 237, yeah. Later on for volatility, potentially, yeah. Anybody in this trade with me on the old YouTubo? Who's in it? Who's bagging with me? There you go. There's your little London trade. Me! Auto Edge ICT Strategies. Jesus. Steve, is that your new name? You are trying to sell the shit out of that, aren't you? You are trying to sell your services. Jesus. Let's go, baby. Let's go. Let's go, baby. Who else is in this? Shorts. God. Talk to me, people. Talk to me. Are we printing or are we printing? There's your 25 points off the high. $500 a contract if you're trading NQ. Oh, did it? Oh, okay, so the alright. I'm with you. So that jam stopped. Sorry guys, I don't know what happened there, the music stopped. Let me try again, let me put it in the chat. Oosh. If you want to listen to the same music, it's there. Let's go, let's go, let's go. One and done, baby. It's what we do. It's what we do. 43 is going to be my final position, just underneath these rows. So this is my current trade at the moment, in at 95, scaled out 87, scaled out 83, just taking this one runner to take out those relatively equal lows on the low. So these lows down here. So this is where it's just a lamb to slaughter, right? This is where it's just a lamb to slaughter. So you've got a new 5 and a new 15. So stop above the high, just a lamb to slaughter to come and drive out these lows. You notice how most secondary entry traders, they haven't even found their entry yet. We are in. Yeet. Thank you. Bosh. 15-minute balanced price range. Right? 15 minutes BPR. Alright? This balanced price range. Right in here. Okay, so you don't mind price testing balanced price range. But on the second occasion, it should not go through it. Alright, so this formed your BPR inside of here on the 15 minute. This came up to C, sure, but it didn't test it. It can test it, but then it shouldn't go through. So that then becomes your high. Red pillars, you'll know what's on this high. And then you're just trading the principles of X levels, right? Taking price back down to a discount as you expand price out through the dealing ranges. Very, very simple stuff. So right now we've got a breaker structure, right, on the 5 minute. Right, this is now an unmitigated range on your. So price can come all the way back up here, but this is where you'd have lambs to slaughter. So for us as red pillars, and for me, I'm 5 contracts deep. All right, I'm 5 contracts deep. So I'll see if I can sort out my 5 contracts deep. Scaled. How many have I got left? Where did I scale? Sorry, scaled. Scaled. Lamb to slaughter. Right? 5, 3, 1, 1 to slaughter. Allowing for what? What are we allowing for? Red pillars. What are we allowing for? God, are you guys awake today? Somebody wake me up. What are we allowing for? Why would we have 1 lamb to slaughter? Anybody? Anybody? Offset accumulation, exactly. Offset accumulation. Alright, let me just get this. So this way you have 1 lamb to slaughter. So if you notice, most secondary entry traders, they wouldn't have even engaged with the market yet. They wouldn't have even engaged with the market. Where does a secondary entry trader get involved with that? You tell me. You tell me, folks. But a turtle suit trader, we're getting in right on this goddamn high into our higher time frame POI. And then our principles of price is that we are taking Earl to Earl, Earl, Earl. Okay, but you've got to anticipate. So if you are entering on a suit, right, you have to pay yourself because you are trading without confirmation, right? But you are trading with the privilege that you are in the highest possible, lowest possible risk, monetary risk, not perceived risk, monetary risk that there is, all right? And that's the difference. So secondary entry traders love to talk about this game of, yes, but we have lower risk because we have some form of confirmation. Right, fair enough. But as a trader, your job is purely to manage risk. And so all I'm interested in is the monetary risk. I'm not interested in your perceived risk of it, breaker structure, all that nonsense. I'm interested in the dollars and cents or the pounds and pence. That's all I'm interested in, right? Tiny goddamn stops, huge risk to reward at the highest probability entry for displacement. That's how I trade. The very turtle suit is what I am trading, not your secondary entry trash. Okay, so if you were trading this and you were looking for a secondary entry, good luck. We're up here, 6-point stop, looking to drive out these lows. Almost a 10 to 1 R. A secondary entry trader will be, I don't even, if they're looking for their little inverted fair value gap, I mean, you haven't even got the breaker structure, so they probably wouldn't have even utilized that. So where is a secondary entry trader getting in on this? They may not have even got in on a trade yet. And so what are they going to do? They're going to force a trade in here. Force a trade on this breaker block. Even if they got in on this candle anticipating a breaker block, even though you didn't really get an entry, you didn't get a boom into a breaker block to go short. Hypothetically, we can use this as an example. This would be the equivalent of their trade. That would be the equivalent of their trade. Right? Two to 1 R. 2 to 1 R versus 10 to 1 R. If you don't understand that, and you can't comprehend that, and you're currently trading secondary entry nonsense, and you think that that is the pinnacle of trading, trust me when I say that, you have got so much to go through and learn. This is the pinnacle of trading, the very swing high, not this garbage. Right, we're already paid. If you want to parlay in here and lower your net position on your runner, for example, with me, I've still got one contract left. So if I wanted to allow price to come back up into this unmitigated range, which funnily enough will get you back into mean threshold of the 15-minute BPR after it's already tested the BPR, then I could parlay in and lower my net position. Would I take my primary entry inside of that? God forbid, no. No, I'm in paid parlay out, not taking a trade, taking my primary position at a trash secondary entry with a stupid risk to reward. So if you combine this risk to reward with consistency, that is how you get to long-term profitability. That is it. Higher risk to reward, lower risk, higher TPs. With consistency is what gets you to long-term consistency very, very quickly. But if you want to go and follow all this Twitter trash and trade these 2-to-1 Rs, your consistency has to be so high, your accuracy, in order for you to maintain consistency and profitability. That is the main difference. So with the strategies that I trade and the way that I trade and the way that I've structured my trading plan and my models, I only need to be right 20% of the time to be profitable. 20% of the time, and I can tell you my accuracy hovers around 70% across a year. Right? So 70% accuracy with a huge R to R, which averages between 6 and 7 to 1 across a year. That's where profitability comes in. But if you're trading this, a 2-to-1 R, you have to at least be 50% accuracy, taking into account fees and commissions, for you to be profitable. 50% of the time, at least. At a bare minimum. At a bare minimum. Right? So that is purely just looking at it from a logical perspective, from the side of risk and what it takes to be profitable. Don't overlook it. But more importantly, there's a psychological aspect between primary and secondary entries. A primary entry is a turtle suit. It's the only primary entry there is a goddamn turtle suit. Everything below a turtle suit is a secondary entry. Right? It's a secondary entry. So the psychological impact is massive. So, and I'll explain. If you're taking this trade, this secondary entry trade, and you get taken out on this trade, for example, you need your 50% accuracy, because you know you now need 50% accuracy in order to maintain consistency because of your retarded, ridiculous risk to reward model. That if this takes you out, you now know that you've got to be right 2 times in a row just to get your profitability back on track. So the chances are that if you took this trade and you go into, like, I don't know, $500 worth of debt, and you know that you've got to be right 2 more times in a row just to get back into profitability, do you not think that this now leads people more towards tilt? Do you not think this pushes people further into tilt quicker? Do you not think? Of course it does. Right? You have this, and now you're absolutely sweating because now you've lost 500. Now you've got to wait for your ridiculous little entry again and sit on that, knowing that you got a $500 loss. You've got to be right 2 times in a row again. That could take you a week with your little secondary entries and your model. All right, so chances are that you dive back into the market unnecessarily, start making mistakes, is high probability. There's a high probability you will push yourself into tilt if you trade secondary entries. I literally never have tilt. Never. And the reason why is because my risk is so small, I do not care if it takes me out. Because I know that I can be right only 20% of the time and I'm consistently profitable. 20%! I could take 10 trades and only be right twice. I could take 10 trades and only be right twice. And I'm profitable. Write it down. I can only be right 20% of the time and I'm profitable. Does that make sense to you? That the penny should fucking drop. Right? So if I get taken out for like $100, $120, $200 trade, I don't care. 1 iota. 1 bit. 1 bit. Because I know I've got this trade in my bag just around the corner, obliterating any loss. There's the difference. So I have no interest in jumping back in trade because I know that my next trade is just around the corner. All it's going to take me is that trade and I'm blowing through my profitability again, my equity curve. Not the same with a secondary entry trader. Not the same. Right? Not the same. Does anyone know how to properly set up notifications for TradeX signal channel? I see only the badge. What do you mean the badge? Would like some pop-up sound. I'm using have you gone to just double check this, Fran? Have you gone to the reaction roles and clicked the emoji at the top in reaction roles? Why is that in there? That should not be in there. Right at the top of reaction roles. Have you clicked that, Fran? So 43 is my final TP on this trade. You've clicked it. In fact, I'm just gonna. There you go. I've just closed out here. I don't need to take these lows. What will often happen is you can get full blown offset accumulation from this low as it flirts with this low and then comes back up and goes down. So I've just closed out my position there. So little 45-point trade this morning. If you got in on that, good stuff. Good stuff. It's what we do. It's what we're about. Off she goes. There you go. Why did I just close on that? That's stupid. This stupid shit this week. Proper stupid shit. There you go, there's my trade. 95 all the way down to 50. So if you got in on that trade, good stuff. Welcome to the Bill by Baggins stream. I'm sorry I won't be able to see it. The creep in it. Sorry, won't be able to see it. Jesus. All right, partner. Only 2 likes on stream today. Oh, bloody hell. Ooh, horrible. Tres horrible. Why do I do it to myself? Why do I do it to myself? Where is everybody today? Where is everybody? Sleeping. Snooze, you lose. Snooze, you lose, baby. Snooze, you lose. Right, what was I doing? I was doing something there. Bum, ba, bum. Bum, 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 bum. So that's literally me done for London. That's your London trade. Done and dusted. One and done, baby. It's what we do. It's what we do. Not that trash. Get rid of that secondary entry stuff. That was our trade today. Lovely, lovely stuff, mate. The weather has turned today, hasn't it? Oh wow! Room out there. I don't know about you, Leo, but this is like perfect golf weather for me. You know, when you have like it's like a week of sun, so this like the underground is hard, and then you have rain, like a light rain. It's like for me, it's like perfect golf weather. Beautiful. It's a nice little 9-iron off a crisp fairway that's slightly got a little bit of dew on it. Early morning, a little bit of rain. Nothing better. Nothing better. Not been playing much recently, which is a shame. Yeah, I played not so long ago. I played Hadley Wood Golf Course. Horrible. Not a great round. I've not been playing all year though. Yeah, I think I'm at like 84 or something ridiculous. I think it was actually 85.